What's up, y'all? This is Dante Cook with Bitcoin Simply coming at y'all with a special Super Bowl edition. You're probably with family and friends, so many of you are going to be getting trolled because Bitcoin's at 71K. We will definitely see a Dos Equis Bitcoin commercial. I don't always buy the Bitcoin dip, but when I do, it dips even more. Not sure why I had a Spanish accent there. Probably because I'm thinking about having to translate into Spanish with the Bad Bunny halftime show. I know if you're like me, this is probably the least interested you've ever been in a Super Bowl. Let's start off with the simple fact that the promotion for this Super Bowl has been absolutely trash. Who did the design for this Super Bowl? I'm an Eagles fan, obviously, and still salty. Seeing a Seahawk in the Super Bowl is like having your crackhead cousin or your drunk uncle come to your wedding. They made it, but you know that they shouldn't be there. Who picked this lineup? Ain't nobody trying to listen to Green Day for the opener and have Google Translate open to watch the halftime show. I was hating on the Seahawks earlier, but I used to love Russell Wilson. But the true national treasure of the Seahawks, who I think are going to win tonight, is Marshawn Lynch. And like Marshawn Lynch, Bitcoin is going to be the last thing standing at the end of the fiat collapse.
Crowd silent now, as opposed to when the Saints have the ball. Oh, look at this run! What a run! Marshawn Lynch still on his feet. Has blockers now. He's dancing his way for the touchdown.
Now, honestly, there's people at your Super Bowl party that still believe that Bitcoin is still $69,000 too high. Like Aunt Jemima Kelly, who wrote this article for the Financial Times. She's like many misinformed people, that the only way to make truly outsized gains in any market is to have some sort of arbitrage, an informational arbitrage.
What we are experiencing right now, Danny, is an information or a knowledge arbitrage.
Yeah.
And so people just do not yet understand how Bitcoin is different and why it is the ultimate store of value and the ultimate debasement asset. They just don't understand it yet. There's a lot of confusion. There, the mainstream media puts out confusing and hit pieces about it all the time. They commingle it with all the other cryptocurrencies, and they just call them all the same thing. And so I have friends who say, "Oh yeah, I own that. I own Bitcoin. I own the Solana one." And it's like, yeah, they just don't get it. And it's okay. It's not their fault. They're just not interested in doing the research themselves. And they're listening to mainstream media and getting their news off of Facebook or their research off of Facebook. They're just not getting it. And so there is an information arbitrage that you and I are experiencing right now. It feels bad. And it makes you feel like, am I an idiot? Am I just stupid how early am I here? And the answer is you're still pretty early, because I think that Bitcoin is going to trade above $1 million in early 2030s. 2032, 2033, I would be very surprised if we're not touching $1 million Bitcoin. That's me. That's my thesis. That's where I believe this thing is going.
The gap between reality and perception, between what you know and understand about the world and what other people believe. And that's exactly where we are in Bitcoin right now. If you believe there's no value, then Bitcoin should go to zero. There is no appropriate price. But the best Bitcoin analyst out there, and if you're like me and are a Bitcoiner, well, he says that we're near the end of this bear market.
If you truly believe that Bitcoin is now dead and the path is towards zero, then this bear market has no floor. And therefore, turn it all off. Walk away. It's over. Who cares? None of this matters. If, on the other hand, and I would wager that pretty much everyone listening to this, except for you, Peter Schiff, everyone listening to this believes the other path, which is it's probably not dead, then you go, well, where are we in the bear? We're in the bottom 20% based on every mean reversion model you can possibly imagine, technical, on-chain, the whole thing. Are we at the bottom? Who knows? This is probably likely to inspire some capitulation based on the fear that we've got. So we've got a lot of the recipes in there and the ingredients for creating that capitulation. It'll take time. It'll probably go down more. It'll be choppy. It'll be painful. You get bear market rallies. You get the hope back in. You'll buy that rally, and then it will sell back off again. It's going to be a process. But unless your decision tree is that Bitcoin is dead, this bear market has an end. And we've done a lot of the work. In my view, we've done a lot of the work. I used in my piece recently, I used two analogies. One, I like the idea of the bison. Bison, when the storm comes, a snowstorm or a storm, they turn and face it. And they basically go through it because it's the fastest way to get to the other side. Everything else runs away from the storm and gets rinsed the whole way. And the other one is you've got your mate on a desert island, and he swims 80% of the way back to shore, gets tired, decides to turn back around. It's like, go the last 20%, push through.
I'll give you two reasons why I believe that we're at the end of this Bitcoin bear market. People don't understand that we're at the end of a 70-year cycle after post-World War II, where the United States was able to dominate the global financial markets, and what they did to make the dollar supreme is that they outsourced American manufacturing to other countries in order to prop up the dollar and the dollar debt. They then used their military to protect sovereign nations and countries and waterways to open up global trade. This decreased manufacturing from the United States and outsourced it to other places in the world. This also decreased the United States' share of global GDP, as other nations have stolen IP, stolen our information, stolen our jobs, and gotten wealthy in the process. Now, I'm not saying that in a negative way or facetious way. I'm just looking at the number and the data, and I'm speaking from an American perspective. And so heavy is the head of the king that wears the crown. The dollar has gotten so big that it's now collapsing on itself. And so now Trump is implementing policies in order to earn back revenue from partners via tariffs. This is step one of his plan. Step two, to decrease the value of the dollar in global markets, they're going to start to decrease the value of the dollar so that the value of other people's currencies goes up. And they don't want that. That makes their debt more expensive and their markets less attractive. So what they're going to do in order to regain balance is they're going to have to buy more long-dated United States Treasury debt. Step number three, decrease the United States' need to have other countries own our own debt through United States treasuries in a traditional form. And what they're going to do is they're going to create a new market entirely through stable coins and digital assets.
A good compromise is everyone leaves a little bit unhappy, right? But I think what's going to happen is that after market structure passes, the banks are going to get fully into the crypto industry. So we're not going to have a separate banking industry and crypto industry. It's going to be one digital assets industry. And I think
will they be regulated
their opinions are going to evolve over time. And I bet you over time, the banks like the idea of paying yield because they're going to be in the stablecoin business.
But will they also be regulated the same way? And I guess that's a big, I mean, the banks will say, hey, if they get to do all the same things we do, how come they don't get regulated the same way?
Well, I guess because they're offering slightly different products, right?
Yeah.
So, but I mean, everyone offering the same product should be regulated in the same way, and we want to get to that harmonization.
And the big gap that's happening between that and where we are now is the Clarity Act. And when that happens, there's not going to be a banking industry and a crypto and digital assets industry. There's going to be just the digital assets industry. The big gatekeeper for Bitcoin's price going to the moon, well, it's going to be big institutions getting into Bitcoin. And they're not going to do that without clarity. That's why next week, this meeting on the Digital Clarity Act and all of the open discussions between senators like Senator Lummis and even the conversations she had with Scott Bessent are really telling that we are near the finish line of getting this Clarity Act across the line. It's important for the United States to rebuild the economic system upon which they want to build their sovereignty in the global sphere. The gatekeeper from trillions of dollars flowing into the industry through big institutions and banks is the Clarity Act.
One of the real gatekeepers here is the Clarity Act. I think there's a lot of fence sitters, institutions, commercial banks, and otherwise that are really not going to move on Bitcoin until they get clarity from the U.S. government. And so I think it's a coin toss now whether or not that gets approved. Some of the Democratic senators I've spoken to say that it will, but I think that's one of the big gating factors here, and this is typical volatility for Bitcoin.
There are trillions of dollars waiting on the sideline. And if you had to dream up a perfect scenario, if you're a Bitcoiner, for mass adoption moving forward, whether you believe that the bank should be involved or not, it's a pro-Bitcoin regulatory framework, and it's a pro-digital asset industry with United States banking systems on our side. Listen to what Michael Saylor had to say about the next two big catalysts.
The second topic is really what are the catalysts for Bitcoin price to improve? Look, I think the fundamental catalysts are regulatory support. We have the most constructive set of financial regulators in the history of the industry right now. The head of the Fed, the head of the Treasury, the head of the CFTC, the head of the SEC, and the White House has a digital assets czar, right? Those five things are massive bold flags. They're all very positive, and generally you would expect that something good will come probably out of the CFTC or the SEC as they are constructive about facilitating financial companies to innovate in the digital asset space. Right, I would have been skeptical about that 2 years ago, but I think for you to be skeptical about their support for digital innovation today would be ignoring all the words from everybody in those positions. And I think that the second The second catalyst will be banking adoption, the formation of the banking credit networks. As the large banks and as companies like Schwab, they start to allow you to trade Bitcoin, custody Bitcoin, borrow against Bitcoin. They're going to legitimize the asset, and they're going to decrease the volatility of the asset. They're going to improve the usefulness of the asset. You're aware of the announcement of the BlackRock Bitcoin Volatility Income Fund that came like about a week ago, where they said they were going to sell volatility or generate income. And a lot of people that speculate that will decrease the volatility of Bitcoin and put a more stable floor into the asset. So I think the actions by big finance, the actions by the big banks, and the actions by the financial regulators are the fundamentals. I mean, those are the fundamental things. And if you were to light a candle and pray, to the gods of the crypto sphere, you would say, I want pro-digital assets regulators, I want pro-digital assets banks, and I want pro-digital assets financial innovations like BlackRock's bringing to the market, like we're bringing to the market, right? Like STRC. But fundamentally, the industry is going to move forward because of enlightened regulation, engaged, thoughtful banking, and then innovative finance. And that's what we're doing, and that's what we see right now.
Great. Thank you, Michael.
Before we go any further on what the best analyst says is the bottom floor which Bitcoin's price is going to go, let's thank our sponsors. If you don't want to sell your Bitcoin and you want to get fiat because you want to live your life, and we still live in a fiat world, well, you can borrow against your Bitcoin stack responsibly through Ledn, the leader in Bitcoin-backed loans since 2018. They've never lost a single cent or sat of customer money. They allow you to borrow up to 50% loan to value to your Bitcoin that you put onto their platform. If you put a $2,000 Bitcoin deposit on their platform, well, you're allowed to borrow up to $1,000 in fiat. Loans start at just 12.4%. There's no credit checks. The application takes just 2 minutes, and there's fiat in your account in less than 6 hours. You should use leverage at any point responsibly. You shouldn't just borrow against your Bitcoin stack unless you're comfortable with your ability to lose it during a downturn. And that's why only a portion of your Bitcoin stack should be put into products like these. Invest responsibly, get started, and get 0.25% off your first Ledn loan by going to learn.ledn.io/simply. One of the ways you can prepare yourself for a future as to when banks do get into Bitcoin, and they might try to pull a 1934 Gold Act, which is, we're going to seize your Bitcoin assets. Well, not yours, because you're going to schedule a free 30-minute consultation with the team at the Bitcoin Way, and they'll show you exactly what to do in a scenario like this. You're going to run your own node, you're going to run it privately, and you're going to be sovereign over your own Bitcoin keys. Schedule a free 30-minute consultation with our team at thebitcoinway.com/simplybitcoin. Well, where does Bitcoin go from here? I'm not a genie, but I do believe that it can go lower from here. But one thing I know about real estate or other assets is people don't tend to sell their assets at a loss. One, everybody hates taxes, and that's why you're putting it off right now when you should be doing them. But the other reason is it's largely psychological. We don't like to take L's. And that's why the best analyst in Bitcoin says that the realized cap in Bitcoin is 55K, and he doesn't believe that we're meaningfully going to fall below those levels. Listen to what he has to say about this.
The realized cap is actually, in my opinion, the most important metric in Bitcoin, because it is a measure of how much people have saved, actually dollar value saved in Bitcoin. The coins you bought back in 2019 at 8K, they're saved at 8K. They're saved at the price when they were last moved on chain. Not a perfect measure, but even if you run the most magical entity adjustments and all that kind of stuff, the realized cap never deviates by more than 5%. It's one of those things where, like, at an individual level, there's error bars around it, but in aggregate, doesn't matter if Binance is consolidating stuff, doesn't matter if you're moving from a cold card to a ledger or back, the overall aggregate doesn't move by more than 5% over all its history. So that number, the amount of capital that Bitcoiners have saved in Bitcoin, measurably, is $1.1 trillion. That is about a 55K. So if we go down to 55K, you've got the 200-week moving average of like 57. That's like every bear market wicks on that level. And by the way, there's no reason that every bear market of the past is indicative of the future bear, right? This is one of those classic things in markets. But if you just think about this from a core fundamental standpoint, it's kind of nice, the 200-week moving average. So all the technical boffins out there are going to look at that and say, oh, that's where it's going to bottom. The realized price at 55 That is where everyone has invested their capital. Let's think about this from a value investor perspective. A company like ExxonMobil is trading at an MNAV, right? An equivalent book value of 0.9. They've spent all this money building all of the infrastructure to pump oil. They've got all the smarts, all the people, all the hardware, all the drilling rigs, all the pumps, everything. And you're going to sell that to me for less than what people paid for it. That's where Bitcoin is at 55K. We as Bitcoiners have invested $1.1 trillion into this thing. At 55K, you are buying Bitcoin at its all-time book value. The actual book value for people who are real, like not Satoshi, who doesn't transact and move and lost miner coins and all that stuff, that's the true market mean at 80K. So we're already below the average cost basis for normal people who are actually alive in the cycle and active. So we're in that, I would say, in my opinion, personally, I think we're in the deep value zone. Below 70, I deem to be deep value because we're in that bottom 20% of all price history across all models. Once you get down to the low 50s, you're now at the territory where it's like, please make me a case that isn't a bottom. You have to actually really go down the first path and say, no, Bitcoin is dead. Once you get down to those low 50s, you're now saying something is wrong with Bitcoin and we are truly going to zero. So that's the framework here. Now, if we go below 50, imagine the capitulation week, but you still got to ask yourself that question. Am I buying an asset that's truly going to zero, or are people just kind of overselling this thing and it comes back? Didn't stay humble at this point. What am I doing?
My closing remarks. The United States are sort of like the Patriots. You can go on winning for years and have a dynasty, but eventually that crown gets too heavy. You have big salary caps, you have big stars that get old, you have old systems that used to work that need to change. And that's what happened with the Patriots. They became the greatest. Tom Brady and Gronk left and they went to Tampa Bay and won some more. However, the Patriots were left in shambles. They went through several different quarterbacks, bad defenses, no stars on offense until they drafted Drake May out of North Carolina 2 years ago. And just like that, they had to collapse the system that worked for the past to create the system for the future. And that's what's going on. There's new blood, there's new leadership, there's a new change of direction in Mike Vrabel, and that's what's happening with the Patriots, and that's what's happening in the U.S. economic financial system. The United States has dominated the global markets for 70 years under a certain regime. We're going to export jobs, we're going to export energy, we're going to protect everybody else without taking in any payment, and now we're reversing that with security payments, with tariffs, with onshoring manufacturing, with bringing down the price of oil, with having other currencies be valued higher against the dollar. And so what's that going to do? That's going to set up an opportunity to rebuild under a new economic financial system. This is going to kick off around midterm elections in June of this year. So right now, I do believe Bitcoin is in deep value. This is the time to buy when you buy low on the Patriots when they have the number 1 or number 2 overall pick. They're a great franchise. They're a great organization. Their system clearly works, even though they do cheat. They did cheat in the past. They knew a lot of plays. I'm still a little bit salty about my guy Russ not winning his second Super Bowl in a row, which probably would have put him in the Hall of Fame versus a journeyman with the Giants where he is now. It's kind of weird. If they didn't cheat and know the play that was going to happen at the 1 yard line, they didn't cheat. They just made a great play. Malcolm Butler, shout out and congrats. That's a little football 101 for you here. This is a Super Bowl edition, and I'm giving you the reasons why Bitcoin is in deep value right now, and there are catalysts on the future that are going to propel Bitcoin even higher. Understand the big game. Understand that we are in an informational arbitrage between reality and what people believe. Some people believe that Bitcoin should go to zero, and if you do, short it. Well, the rest of us, we think it's going to $1 million a coin. And one of the ways you can participate in that, after Bitcoin has had one of its largest crashes in the history of Bitcoin over the past several days. Well, when that typically happens, miners capitulate. That's why the Bitcoin difficulty adjustment, or how much Bitcoin you can get per mining hash that you put out there, has gone down by 11%. That's the 10th largest in history. And that means the miners are going offline. And so what that means for people like you and me is that we can earn more Bitcoin sats if we were to get into Bitcoin mining. But how do you do that? Well, you don't set up a miner in your basement. You work with a company like SAS Mining, who's able to help you mine Bitcoin with state-of-the-art mining machines and rigs. They look at them, they keep your uptime up above 99%, and they just send you sats to your wallet. You get potential capital gains benefits like capital depreciation of those assets, and you get sats flowing directly to your wallet, DCAing every single month. Use the QR code on the screen to get started. This is Dante Cook with Bitcoin Simply. Happy stacking and happy Super Bowl. Go Eagles.